TGIF Warriors. And
TGIF coach.
Yeah, boy, I had a hard time getting out of bed today, buddy.
It's tough, isn't it, man? It's especially when
yeah,
it's nice and cool at night, like it is.
yeah, yeah. And anyway,
Anyway, good morning.
made the bell, bro. So hi, I'm Michael Weissman, James Groom, Brand. We have F.A.C.E today. Kman, how are you? Andrew Pearl, haven't seen your name in a while. Hi, Laura. Thank you for your support and being a fan of what we do for years now. I want to just mention that. Hi, AJ, Ryan's team. So Blake, good morning. Canada's at an important place right here. You know, I tried the short side yesterday. I'm out. I don't know if we're going to break down or not. But Canada beginning to display weakness because the dollar was, up yesterday and Canada was still down, just something I noticed. So let's bring in Ryan. How are you today, buddy?
Good afternoon or good morning to you, mate.
You're ringing the register on any of your longs? Just trailing
No,
stops?
no, I'm getting a bit twitchy over the S&P. My
Okay.
longs, my break longs, it's not getting through that 4,900 level again, which may indicate we might be forming a bit more of a top up here now.
Yeah,
The sellers up there on that high were protecting it at 4,900 yesterday. We've
right.
had a couple of
Yeah.
goes now, so if we don't get through today, I might take a bit more off the table.
Look how much weaker NAS is
Yeah.
comparatively. So NAS didn't even get back up to that level. S&Ps were retesting yesterday. Yeah, that's kind of a, they let it, right, with the Mag 7. Um, Apple was one of the only stocks did not make a new high. Here was the upgrade, just pushed it back to the old high and could be rolling over. And Amazon, I've been watching for a while. There's all kinds of divergences there. So, um, yeah, it looks like we're getting close to something. Plus, the VIX has been edging up. Even when the market's higher, they're not taking much out of it. There's the 2 hour on it, leaving a little gap this morning.
Yeah, a bit of a
I think
creep up, isn't it?
we could attack this high here. Here's 1, 2. Head back up there again. Uh, how about the dollar? You have a view on what's happening here with the dollar? I mean, euro was weaker. Tip of the hat on Kman and EG didn't quite get there yet, but it paid to be patient. I'm long. Um, Not sure if you're still
You're
waiting
long,
for this. Huh?
you're long already. What, gold or euro
Oh,
sterling?
my goodness. Yeah. EG.
Yeah, I've just dropped some bids back in down near the big figure.
Okay.
That 85.20 is quite a big level as well. But we had 50s resistance. We broke the 50s resistance. We can't get
Yeah.
back up there to test it.
Yeah.
So yeah, it's still looking weak. 20s is the
Yeah.
next level through there, and we're definitely testing the big figure. But I was
Okay.
looking to see if it happened over the ECB, the perfect storm. We
Right.
didn't get a rally or much of a dip, so that was a non-event. So yeah, I like longs back in to that one at 85, just purely from a technical basis, but I won't marry it.
Okay. So are we going to put in a little double top here and uh, the dollar? If we take 102.80 out, we're talking about 102 or so. If that's the case, I mean, euro's been the weakness as we've just talked about in EG, but this looked like a little stop hunt in euro yesterday. Took out this low. This must have been last night, but it's got really did diverge and just haven't been able to break cable. I can't get long Aussie, and it's not time for me to buy it yet. And you have a
Yo-yo
feel on,
markets again, isn't it?
huh?
Yo-yo markets again.
Yeah,
We had good data from the US yesterday. Dollar rallies, it gets spanked.
yeah,
That's been a theme of late. And then this morning, the dollar looks like it's carving up euro to those lows, and then we get
yeah,
another bounce, and we're back up near a 109 again. It's you can't have any confidence that any moves are going to last right at the moment.
Yeah, well, you know, Canada's kind of been the leader on all turns the last month or so. You know, it bottomed first at 32. It was peaking out before the dollar pop. Maybe that's a tell.
Yeah.
If Canada breaks down here, that the dollar, you know, has another decline in it before we head up again. Silver, I missed it so far. You know, I thought this 22.5 was going to be important. Once it got above it, yeah, here we go. Gold, same thing with gold. I mean, it doesn't look great to me. I haven't done anything in the miners. It's getting harder and harder to be patient. Gold silver ratio pulling all the way back to where it broke out of. I wouldn't sell it here, but that may have been a high because it's Friday, right? So if it's Friday, unless something, you know, real big happens today, you can look at weeklies, right? So not a good weekly candle, which favors, you know, silver now. Also Dixie, what kind of weekly candles? Kind of neutral. And even though the yen recovered, it's still a red candle up here at resistance. Tough calls for me as far as committing new money to anything. Maybe Kman has some ideas going into this number. How are you, buddy?
Morning, Dale. Good morning, everybody. TGIF.
Yeah.
IDs. I've got a couple of plans for those data coming up. Yeah. I think and I've got plans both sides of the dollar. I think if the numbers are really good, I guess euro dollar goes back down to retest those lows. If the numbers come in slightly on the disappointing side vis-a-vis the numbers that we had yesterday, I could see cable and Aussie pushing higher. So those are the majors or the main ones that I'm looking at. I'm not a huge fan of still trading the yen right now, because you could argue bad numbers, dollar yen down, but then look at where those yen crosses are. It's actually probably the opposite is probably true. If the numbers would be good, dollar yen could push back up to the 148.75 or so. But those are things that I'm looking at. Yeah, euro sterling, I took some off yesterday in the 85.20s. And now we see if the offers that we saw coming down all the way from 86.20, if they are going to show up anywhere between 40 and 50 after being in the 60s. If it starts to get back above 85, 60, 65, I'm probably going to take the rest of my euro short back and call it a day, take the pips and run. Really, that's about it. For the rest, I'm trading my dollar Swiss option around and trading my hedges around. Think 85.5, 85.75 dollar Swiss should be a very good support, but we'll see.
Okay. Silver ends up having a decent week from starting off. Looked like a breakdown. You do anything with it?
Just like here and there a little scalp, but I have not added to my long terms. No. My call levels were lower.
Okay.
Yeah.
All right. And crude looks pretty good. I mean,
Yeah, I think
the first time in a while, WTI's looked okay. Also, the 10-year had a negative week. I mean, lower yields. So there's a day 424 was 38% back. So it couldn't even get there. I guess today's number will make the whole week. It'll either confirm what we did this week, or maybe there still could be a reversal. That I saw there are stories about some record funding treasury auctions. When are they? Next week?
Monday and Wednesday are going to be
Monday or
announced,
Wednesday, yeah.
right? Yeah.
Okay.
And I was gonna probe you, Kman, and Ryan, and I know it's a big deal. What specifically will you guys be looking for? I'm gonna end up having a conversation a little bit later today with a couple other like people, and they were like, oh yeah, we should be paying attention to that. And I'm like, it has been market moving the last couple of announcements, but what would you be looking for, Kay?
Well, I mean, first of all, the amounts is one thing, but then we are going to have to look at the balance between bills and bonds. And
Yeah, it's the shift, right?
yeah, if they
Yeah.
shift back to the longer end, then watch out. Then there's going to be a lot of shouts for liquidity and such. But I think looking at where they are, the reserve repo is at right now, it would come as a little surprise if they shift back to the longer end. Although Yellen yesterday was very happy with everything. So has she been
Sure, look at this. Why shouldn't she be happy?
sending us? Has she been sending us a message? I don't know. And let's see how it comes out, and then we'll see. But just as I said, recall the last two announcements really were market moving. August and early November, right?
I just want to touch on the Widowmaker. So, we gapped down the other day and we filled the gap. So it makes it an exhaustion gap on the daily. We were diverging down here, but on shorter time frames, that's not the case. So it's got to do some work and make new lows, as you can see on the 4 hour. Here we are pretty much confirming it with a lot of mo. So I'm just stalking this because $2 natural gas is historically pretty cheap. So I'm keeping an eye on looking for some type of bottom to develop here in that.
It's funny you say Widowmaker, Dale. I mean, how many? And I sympathize, because how many traders have really, they've probably said over the last, I don't know, year, 2 years, how historically cheap natural gas is. So they continue to focus on it. And it's been just a really tough trade. And you call it a Widowmaker, which is a true statement, because so many people just can't shake it. They get in that mindset of revenge trading, like, oh no, it's going to turn now. Now it's going to turn. But I mean, you don't like focus on that gas all the time, but you are there right now. And it's interesting. There's probably a lot of people that just all that whole way down, they just, they're trying to buy it the whole way down.
Three is really the key. It's failed there a couple of times, but longer term, look at where we at. This is as far back as this contract goes, but 140 historic lows. So, even if we get some type of corrective move in that gas from where it was, there could be some, good money made. It's a weather market, and winter isn't over. We still have another 2 months.
Yeah. Well, hey, Dale, you mind if I take over here?
No.
Or what, it's Friday. We got PCE coming.
Yeah.
And I know everybody just wants to wrap up the week. Brand just said bottom picking killed me. Well, when you're not a proctologist and you pretend to be one, that'll happen, right?
It's a tough job.
What's the old saying, Dale? Pick bottoms, get stinky fingers, something like that.
That's yours.
Oh, hey,
Dale's one is pick bottoms, get arrested.
Get what? Arrested?
Pick bottoms, get arrested.
That's got to be a UK thing. I mean, a bunch of pickpocketers. Hey, real quick, I wanted to point out yesterday something that we were talking about. We discussed it here, I believe. Correct me if I'm wrong, Ryan. You'd probably remember. We talked about the megaphone pattern in the euro, and about how, or maybe it was actually on the morning edge. It might have been after the show. We talked about it forming a megaphone pattern, and last night said, hey, we're developing a megaphone pattern, which means gains or sell-offs may be limited. And of course, the euro slips to new lows in European trade and then rips higher. obviously there's been some pushback from the ECB, but what did the ECB say overnight that really triggered the move reversal there in European trade?
Not a lot. We've had the usual floodgates open, and most of them have been the pushback brigade, all the hawks coming in saying it's still too early to discuss cuts and whatnot. So no idea why we hit new lows and all that lot.
Yeah, it was like it's like, you know,
either.
yeah, like we got all these comments, which again, it's the pushback, like, but it wasn't just sources. We actually had some ECB members come out and rattle off some comments. But yeah, it's frustrating because when you're in a megaphone pattern like this, you have to be really, really careful about chasing tops, chasing lows, selling in the hole and chasing higher, or you're going to get John G'd all over the place. And, that's frustrating. So, yeah, it recognizing that you're in a megaphone pattern is really key in choppy markets. There is going to be something that develops a direction. The market's going to find a direction. I don't know if today's PCE data is going to be it, because I think forecasters have a pretty good handle on identifying, how, the forecast, and I don't think you're going to be too far off as far as PCE goes. We should see a continued, disinflationary type of data. But I'm gonna take a step back really quick, and I want to look at the dollar just technically. And I wanted to state, despite everything that's happened this week, next week we have the Fed, and we have, as we were just discussing a little bit earlier, the quarterly refinancing of the auctions, the QRA that's going to be out, and Kman, was explaining that a little bit earlier. Despite all, everything that's happened this week, the dollar hasn't gone anywhere. We're consolidating in breakout territory from an inverted head and shoulder pattern. We still have some upside, but we are like, this 200 DMA is acting like a magnet at the moment. Anything above or below is just kind of containing price. I'm still bullish the dollar near term. And I still think that the dollar's got further to go, especially, given the fact that stocks are higher now, but the dollar's still maintaining its gains. Usually in a situation where you have stocks rallying as they are, the dollar is going to be sold as dollars are deployed into other assets, whether it's the German DAX or the S&P or Bitcoin, whatever it is. When people are risk on, quote unquote risk on, they tend to sell dollars, but that hasn't been the case right now. So in the near term, I'm very long the dollar. I'm not very long. Well, I am actually long the dollar for the most part. But I'm pretty bullish in the near term on the dollar. But I want to talk a little bit about something that's got my attention that I'm a little concerned about longer term for the dollar, and really focus on some of the volatility that that might be in store this year. And this is going to go into U.S. politics, and I don't want this to be a political show, as I never do. And we've been doing this show live, Dale, for what, 7 years now, every day. And we try to make it non-political. Although, when you get into the season, I don't want anybody to get fired up. I want to, tell everybody we try to be as, neutral as possible. But there's something that's really brewing here in the U.S. If you haven't seen some of the headlines, there's been an unprecedented number of immigrants, just crossing U.S. borders as of late, and they're crossing into Texas. Texas is I think George Abbott, who's the governor of Texas, basically said, hey, we're not, we're gonna protect our borders. And now you have like 25 other Republican governors have joined in this, like, I stand with Texas. And and this is against like some of the Supreme Court rulings about about razor wire and blah 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 blah. But the point is, and I don't need to hear from any of you whether you agree or disagree, because it really is irrelevant in this conversation. And I'm not going to give you my opinions either. But what I am going to say is you're now starting to see the envelope being pushed between Republican states against the Biden administration. Now, the reason why this is significant is now you got, and rightfully so, the door's open for Trump to go, oh, let me jump on that bandwagon really quick. This is like a gift for me, stirring up his base rally. So he's taking advantage of it, rightfully so. But what it's doing is it's creating a big divide here in the US, and it continues to create a little bit of havoc. And I want this little bubbling beneath the surface gets me a little concerned about the dollar longer term. You know what I mean? And that's one thing I want us to be thinking about as we move into 2024. Dale, you've technically looked at the dollar and you're like, man, give me 105 and I'm selling it. Right? Yeah. As things start to get a little bit trickier in this political season in the US, depending how things start to flare up, because a lot of people will rush to the dollar automatically from a risk aversion standpoint. If people feel that there's really a lot of social unrest in the US, but at the same time, one of the a lot of people look at like the dollar or any currency for that matter, and they buy the currency. A lot of people are like, well, why do you even buy a currency? What's a currency backed by? It's really backed by its society, and stability of its, society and productivity of its society. If things start to get a little bit messy here in the US this year, which is, I don't want to be a, doom and gloomer type of guy. I just, and I try not to be, but it's a pretty contentious year, and it's going to be a pretty contentious election, no matter what side you sit on, or if you even sit in the middle. The fact of the matter is, this is what we are dealing with, and it does concern me, the stability of the U.S. and socially, whether it starts to disrupt businesses and sentiment in the future is something that it truly does concern me going into this year. And that's why I wanted to bring that up, not because I think, oh, everybody should run out and just sell dollars today. No, that's not the case. And I'm actually long dollars in more than I'm short dollars at the moment, looking at my open
Blake,
position.
I talked to a former CME floor trader from the old days this week, and he presented a pretty good technical case that, opened my mind. He's looking for, 120 in the Dixie, and, built the technical case. He only trades off weeklies. He says
Interesting.
everything else is noise since he left the floor.
Hmm.
And he's got, an equality move from that first move we had.
It'd probably be something like this, right?
Yeah.
I'm assuming.
That's it.
And look, I'm not gonna sit here and tell you that the dollar can't rally or will or won't rally.
That's like the milkshake theory.
Yeah, and that's definitely when there's a liquidity issue. I mean, we've seen
Right.
it. Whether it's the, if you talk about the GFC, and you could say the US basically blew up there. Well, Barclays did, and
that would
Bear
crush
Stearns and
emerging
whatnot.
markets. It would crush emerging markets.
Yeah, I mean, there could be a rush to buy dollars, and then after the fact, because a lot of situations in the world, since we are in a dollar denominated global system, you could argue, being the dollar is the reserve currency. If there is a big disruption, the first thing that happens is, it's like you're in a, and I'll use the analogy, being, former combat veteran that I am. You shoot first, ask questions later, and in the market sense, it'd be like, give me dollars first, because I need them. And once I get my dollars, I'll figure it out after that. You know what I mean? So you could get that, dollar rip higher in a crisis situation. And then, people go, oh shit, why do I own all these dollars? Let me start to get out of them. Which, so, a move to 120 is not like out of the question at any, but what I guess the point I want to make is volatility is a thing, and volatility I think is going to be really big this year. That's why if you guys haven't, started looking into the trader funding program, you should probably start looking into it, because you can actually take advantage of volatility without putting your own money at risk in a trader funding program. That was just an easy way for me to talk about our funding programs. But being in a community and being able to discuss these items throughout the course of the day inside of a community where you're not bothered with the Twitter freaking faceless trolls. You can have a community and have a conversation with people that are wanting to talk about these types of things inside of our community at the same time. So anyway, I just think it's a big issue that we need to be paying really close attention to as we go into 2024. How it shakes out dollar wise and how it shakes out market wise is to be determined, but I think there's going to be a whole hell of a lot of volatility this year. And anyway, I just wanted to talk about that real quick. Ryan, it sounded like you were going to say something.
Hey, mate? No, not me.
Oh, I thought you unmuted maybe to say something. Ryan, do you have any comments regarding this? We have PCE coming up in 2 minutes, and Kman, you may have some comments too. I'd love to hear from you. But you have any comments about volatility?
Like, I want to hear from you. Where's Canada going? You timed this, the long side pretty good. Does this have you question this recent uptrend that we could get a pullback to like 33 or so?
I'm looking. Well, so I was looking at this, really quick. I was looking at this as a wedge, but we're kind of breaking below wedge support. So here's the thing: we might have a little double top now. Yeah. One of the other things is crude is testing the 200 DMA, and if crude continues to rally and put some pressure on the markets, it's going to put pressure on inflation too. But you could see Canada possibly, reverse and see back to 133. I don't have any, actually, I take that back. I do have a little bit of Canadian exposure, but not in here in the loonie. So, if you guys want to know what I'm trading, just go to the trades room of our chat room and you can see exactly what positions I'm in, because I post my whole positions right there. But I'm gonna go not show you guys. So there you go. Unless you're in the community. So Ryan, what are your thoughts here as we go into 2024?
You want my whole year thoughts?
All of it in 1 minute, please. Pretty please. Just kidding.
Right. Part of that thought is a PCE, which is coming up next. Yeah, I think we've got to look at this PCE data in terms of what we got from the CPI data, which is a bit of stickiness. This data will either add to that or take away from it. So if this data is much softer, particularly the core numbers, inflation coming down here, then the market's going to take these numbers over the CPI data because it's the Fed's preferred measure. So and we've seen any strong numbers of late, even yesterday, that whole host of data, strong, dollar rallied, got smacked. So that's been a theme that certainly James in our room has been pointing out recently. Market loves to sell the dollars. So same thing applies here. Is this going to be game-changing data? I doubt it, but it could bring us a decent move to some of the range edges.
Yeah. We could definitely see the edges. Kman, I know I limited your time here. Sorry, I didn't mean to. You have any thoughts about volatility?
All the rest I've got a headache about, but no, I'm just repeating what I said. Open-minded on those numbers, although I'm actually open to a bit of a negative surprise, perhaps. In that case, I think cable could shoot through, and perhaps Aussie dollar as well higher, and on a better number, euro dollar back down, I guess. But interesting zone, very interesting zone, 107.90, 108, 10.15 on the euro dollar. I think decisive, really, in my book at least.
All right, cool. We're about 30 seconds away, and look, I'm reading some of your comments in the chat. Look, this border whole situation here in the U.S., it creates a lot of emotions. Believe me, I'm very emotional about it. I have a lot of opinions. I'm obviously not going to voice them here. I don't want to. I don't think it's appropriate. But I want to say that it is That's intended. It is intended by all of our politicians to create these types of emotions ahead of an election. So just FYI. Okay, data should be out coming up.
Spending okay. And
Core
a
soft.
little bit,
Core
a
soft.
little bit lower PCE.
Look at stocks. They're trying to push higher.
Yeah,
They
core
like weak data.
2.9.
The rest as expected.
Yeah, in line, huh? Well,
Personal spending is still good. Consumption in line, and the past ones revised a tad higher. So the consumer is still doing okay.
all right. And you know what? The dollar, spiked down and then it's reversing a little bit.
With yields.
Yeah, I see yields are starting to pop higher here. The dollar's, responsive to that. The S&P, spiked up and then kind of reversed. Again, these numbers are in line, and it's not difficult for the banks and to forecast to be too far off once you've gotten all the inputs throughout the course of the month on PCE. But this might be an excuse since it was in line for the most part. You might get some profit taking here. It is the end of the week. We are at all-time highs in the S&P. I don't think I'm the only person, and you guys as well, that have seen divergence in this rally as we've hit new highs. You might get some profit taking. And there's always risks over the weekend, especially with everything that's happening geopolitically. So, I'm not saying that the bullish market in the S&P is over by any stretch of the means, but could we pull back towards 48.50 here? Maybe another 30 or 40 points lower before we reset for a continuation higher. I think it's possible. But anyway, I want to say thanks, Ryan. Thanks, Kman, for being here. I know you guys, come off your flow show. If you guys aren't listening to the flow show every day to hear Ryan and Kman's opinions about the markets, make sure you do so. They are live every single morning. Right here, you can grab a link right on our website to go listen to them for free. If I was awake and Dale was awake, believe me, we'd be there too. But man's got to sleep, right, Dale?
Yeah, at least a few hours.
At least a few hours, and especially in the wintertime when it's nice and cozy. I sleep like a baby. But yeah, make sure you guys are listening in the flow show. So Ryan, Kman, thank you guys for being here. Appreciate you.
Cheers.
Thanks,
mate.
team.
Same to you, mate, and coach.
Yeah, thanks for another great week, everybody. Thank you, Ryan and Kman and Blake, and for choppy markets. I think we've laid out some game plans for people. One thing before we go, Blake,
Yeah.
USD MEX really to me looks like a big ascending triangle. Double top there. Yeah, there you go. If you go back shorter term.
Oh,
Yeah.
shorter term. Yeah. That's the 200 DMA.
Right. Okay. Yeah. So it looks like an ascending triangle. We get through there. You got 1780.
Yeah. Oh, yeah. I mean, this is, I think this is a good way to look at it. I'll just read this to you guys so you guys can see it. We are trapped between the 50 DMA, 200 DMA. And today the low was at the 50 DMA.
Yeah.
Literally right after the data, we hit the 50 DMA and bounced. So you can see us trapped. And I think you're right, Dale. We get above 1740 and it's lights out for the peso.
And it might be kind of a harbinger for risk off.
Oh yeah, for sure.
Yeah. So anyway, I just wanted to bring it up.
Thanks for bringing that up. I appreciate it.
I'm bringing in a guy.
I appreciate you.
Thank you, buddy. And I'm bringing in a guy who at 104 euro about 3-4 months ago liked it for a move to at least 109. And Okan Abar is with us. Okan, welcome back to F.A.C.E. That was a great call that you made back there. I'm going to ask you to unmute so we could hear you live from Turkey. How you doing, buddy?
Hey, thanks, Dale. Have a great weekend and have a great interview with Okan.
All right. Thank you, Blake. Thanks team.
Coach.
You have a great weekend. Okan, are you there? How you doing, buddy? I'm asking you to unmute so we could you could take a victory lap here. Go ahead.
Okay, can you hear me now?
Got you now, Okan. How are you, buddy?
Okay, good. Thank you, Dale. How are you?
All right. So great to have you back. I just let the community know how you nailed the lows in euro. And you thought we'd trade at least 109. So has the story changed in euro, or are we looking at all pullbacks just mean buying opportunities for higher levels in 2024?
Exactly. About 15 minutes ago, a gentleman talked about a trader at the
Oh,
CBOE desk or someone, I
yeah,
don't remember.
SIBO. That's a
See, it's,
Chicago Board of Options Exchange.
yeah, yeah, yeah. And he mentioned that that trader is expecting the euro dollar to go up to 120. And,
Okay.
and I totally agree with him. And I'm going to share with you why I believe so
Okay.
today.
All right. That'd be great. I want to show you how he gets there. All right.
Sure.
Because that's something I'm talking about. I'm looking to buy it at 107-ish. I think we'll still get a break and Dixie might still trade up to 105. So this is how Euro gets there. It's off the weekly.
Yeah, exactly.
So,
What
you got
I
the
believe
same thing?
this. Yeah, I
This
believe I'm
moving average? Yeah. So
not to do nothing to do with the moving average. My reasoning is has different
all
story
right.
about it.
Well, I'm just
Uh,
giving you a measured move from basic technical analysis, right?
oh, yeah,
So 104, 111 and a half, about 7.5. You tack that on, it gives you 120.
exactly.
That's a breakout over the 1140 high.
Yeah.
So I could see that, and I'm interested. I love it actually, Okan, when people come to the same conclusion using different methodology. To me, it's almost like confluence. That different modes of coming to the same conclusion, pointing to the same thing, gives me even more conviction on the trade. So go ahead and share the screen and let's see what
Sure.
you're looking at.
Of course, sure. 1 second.
How are things going in Turkey?
Oh, it's a very, very choppy environment here.
Yeah.
Financial markets
How
are
did you
very
deal
choppy.
with the currency crisis with what happened to the lira over the last several years?
Well,
I,
what happened was that the Turkish lira was so much under pressure because there was too much demand
yeah,
for the foreign currencies. And the reason why the Turkish lira has been under pressure is because expect imagine a country where the inflation is about 50%, but the interest rates are around 30%. So there's minus 20% real return in Turkish lira. So nobody's willing to buy Turkish lira. So everybody goes long for the foreign currency.
okay.
And
So
two
in your
years ago,
daily life, how did you deal with it? Um, are you constantly converting to US
uh,
dollars and other currencies every time you get paid liras?
what I do in particular is I buy stocks. So stocks is a very good protection against weaker Turkish lira. The reason is
Okay. All right.
as Turkish lira gets weaker, um,
Yeah, it
the
inflates
foreign
stocks.
investors, yeah, it inflates stocks like it's in the US, but
Right.
the magnitude is larger in Turkey because the inflation and the interest rate difference is very, very wide.
Okay.
For
So that
example, nowadays, yeah, go ahead.
No, okay, so I understand how you're the investable part of it, but how about the daily life part of it? When you go to a grocery store, or you have to pay a landlord or a
Yeah.
creditor. How do you go about that with a currency that's been collapsing for years?
Okay, what happens is every week you can see changing prices based on the inflation. But the problem, Dale, is the inflation, the announced inflation is, let's say, nowadays it's about 60%. But the actual inflation that people feel is double than that, like
Yeah, right,
120%.
right.
That's a big problem. And because of that, what happens is everybody is when they get the currency, let's say when they get their salaries or their paychecks, whatever it is,
Right. Right.
they stock the goods that they're going to already they buy the grocery store stuff um, in huge amounts before the prices go up. So they are
Gotcha.
actually stocking. Yeah,
Okay. They're
that's how
hoarding.
people exactly.
Okay.
Yeah,
All right.
and
Wow.
that of course is fueling the inflation also. So when people buy groceries or anything like not even only groceries, everything like cars, everything with the expectation that the prices are going to go higher, then the prices really do go higher. Okay, so that's the problem. We cannot beat the expectations just because the interest rates are always below the actual inflation rate.
Wow.
So
What a
that's the problem.
lot of duress for a nation's population to deal with. And you're not the first. I mean, it's happened in South America quite a few times, Argentina, Brazil, these types of, it's happened in Thailand when you had the Thai baht situation. And you know what? Americans say that could never happen here, but it's almost like we're seeing the beginning stages of it already.
Dale, that's really almost impossible that something the same thing can happen in the US. The reason
Well,
is
that's
because
good. The best news I heard all year.
no, because the productivity rate is high in the US, and people
Okay.
are producing, and also there is a sound monetary policy being applied in the US. And not only
Really?
the monetary policy, of course, I think Federal Reserve is very successful, and also not only the political, I mean the monetary policy is successful, but the production policy is successful.
Okay.
It's I mean you can
So that's
only
why
keep the
everyone wants to come here.
exactly. So because there's productivity is high, and there is jobs available, and there's demand for American goods and services. So for as long as that continues, you should have no problem
Okay.
about the future.
So from Turkey, does America look strong, or does it, like our adversaries say, looking weaker?
Well, every country has its
Cycles?
cycles.
Yeah.
Yeah, I think U.S. is approaching to a cycle where the economic cycle is going to go from this level to a lower level in terms of production. I mean, I can see this from the Federal Reserve's policy. As you can see on my screen that I'm
Yeah.
sharing with you. If you see that although the inflation has been slowing down a little bit in the past like 6 to 9 months,
Yeah.
the Federal Reserve is still keeping the rates at 5.5%. So there's a plateau here, you see?
Yeah.
And for this reason, only for this reason, if you look at my chart, you see this blue line is the break-even rates in the US for the 2 years period. You can see this as an inflation expectation for the period of next 2 years. You see
Yes.
the inflation expectations are low. All right. So
Yeah.
it used to be before the monetary policy started, the tight monetary started, it used to be at 4.81%, like around this rate
Yeah.
area. And
Yeah.
now it is at 2.35. So, and it
Right.
has been around these levels for a long time. Why? Because the Federal Reserve rates has continued to increasing rates.
So do we
Okay,
have a
so this
reversion to the mean where the Fed drops rates and uh I don't know, this is the 1 year and they
I,
converge? Do they converge, the Fed
I
and the
think at
2 year?
some point, the
Okay.
inflation expectations have to go up. The reason is you need growth. Okay, so
Yeah.
at some point, the Federal Reserve, once they see that the inflationary pressures are really not a threat to U.S. economy, they're going to start to ease the rates. I believe starting from the September, sometime in between September and December. So when the Federal Reserve starts to ease monetary policy, then I think that this break-even rates will start to increase.
Okay, so nothing in March. You're pretty far out there compared to the narrative in the market where people think they're going to start dropping rates in the spring or summer. You're all the way out into the fall.
I think it should start starting from fall, because the reason is, I mean, if you look at US data coming, they're very strong. I mean, sometimes they're weak, sometimes they're strong. You see the inflation data is coming weaker, that's fine. But
Yeah.
but on the contrary, you see some economic data coming in stronger, and that's strange, right? So and I actually, that's not strange. That's because there's productivity in the US. So the productivity, high level productivity, is keeping the inflation pressures low. Okay. So,
Okay.
but still, the US data is coming strong. For as long as they come strong, I think US will maintain this policy for at least about 6 months from now, at least for 6 months from now. So I think
Okay.
it should start from September.
Okay. So what's the euro do between now and September, which is pretty
Okay,
far out?
I think let me explain this uh, from the commodities point of view, if I may.
Sure. Sure.
Uh, I'm now sharing with you another page where I have this 2 years break even with the white line and the dollar index with the blue line, right? So
Okay.
as you can see that uh, over a long period of time, you can see that these two indices are working against each other. So when the break-even rates go up, the dollar goes down. So that's always this story. Now, as I mentioned to you, that coming into, I mean, I believe that starting from June or July, sometime around that time, the break-even rates will begin to increase. So it should start to put some pressure on the dollar. So and why I think so is because, again, once the Federal Reserve starts to keep once the Federal Reserve, I'm sorry, one second, please. I'm sorry.
Okay. It's all right. Live
Uh,
TV.
I I I I am I'm here with some kids. Sorry.
Yeah.
Okay.
It's okay.
Once the Federal Reserve starts to decrease the interest rate, I think, and I think that's going to be around September, I said.
Yeah.
I think the break-even rates are going to go up higher, and that's going to pull the dollar down.
Okay.
But until that time, until this happens, I think that we will see some strength in the dollar, and the reason is
Interesting.
let me show you why I believe so. Is if you switch to the next page, sorry, this one. This is crude oil, right? Do
Yeah.
you realize that all right, so this blue line is the crude oil price, the
Right.
nearby price,
Yeah.
and this is the convenience yield of the crude oil. And if you realize that the break-even rates are are are, are working against these two, right? So the break-even rates, the crude oil prices are working against each other. Uh, Now, since I believe that um, in the near term, because the Federal Reserve is going to keep its policy, is going to maintain its policy, I think that uh, that in the short term, this break-even rates are going to stay around these levels. So it's not going to go higher in the near term. and we can see this that the from I mean we can see this from the commodity world, from especially from the crude oil world, because as the break-even rates are going to go down from today until the next 4 or 5 months, I think that the crude oil prices will start to inch a little higher than these levels where it's staying. Nowadays, I think it's $75 right now, $76, 76,
Yeah,
67.
up there, high
Yeah, so
70s.
that's
Yeah,
up. Yeah, exactly. So I think it's going to go up to 80 or uh, uh, price bands where it's going to stay between $80 and $75 in the next couple of months, because $70 is really, really cheap for the dollar for the time being.
yeah.
And that's so that's the reason why we are going to see a
Dollar strength.
that's all the dollar strength. Yeah, exactly. So it's not going to go higher than $80, right? So for as long as the commodity prices are strong, even if it is even it's between 75 and $80, that's strength for the dollar. It's associated with the strength of the dollar because
So are you talking
still,
about subpar in euro during this 6 month time
no,
frame?
no.
What?
I think we will trade somewhere between 105 and 107. And I think it's
Okay.
going to be a great buying opportunity for the euro dollar.
Yeah.
I mean, if you're asking
Okay.
me about the euro dollar, I think it's going to be a good opportunity for the euro dollar to go long from 105, between 105 and 107.
Okay.
And let me tell you why I also think that uh, starting from maybe 3 months from today, you should be buying the euro against the dollar, is because if you look at this chart where you see, okay, this chart is showing you the gold and silver performance. If you look at, okay, this blue line is the convenience yield for the silver, and this red one is the convenience yield for the gold, and this one is the dollar index. As you can see that the silver convenience yield being higher is associated with a weaker dollar, right? So, for
Right.
example, if you look at this blue line, which is the convenience yield for the silver, it
Mhm.
goes above the convenience yield of gold. You see this red one? So
Yes.
it goes there and it waits for about 2 months there. If and then once it maintains this situation where the convenience of the silver is higher than the convenience of gold, then you start to see uh, weakness in the DXY in the dollar index. I mean, do you realize this that the blue line is getting higher than the red line, and then after about 2 months, you see the dollar index, which is this white line, going lower. Okay, so
Yeah.
this area. Now we're seeing the same story. You see this blue line, which is the convenience of silver, is going higher than the convenience yield of gold, right? And and it's
What
and
does it
because
mean,
this
convenience yield?
con, con,
Is
convenience
it
yield is all right. It is the yield where thanks to which a trader makes a gain for holding the commodity despite its funding costs.
okay?
So, which means that, for example, it means that if you stock any commodity, you're giving up currency, right? So once
Right.
once you give up currency, you're actually losing interest rate. So, but the convenience yield is that it is the it is a not
It
it's like an
outpaces the
interest.
yield you would get on the currency.
Exactly. So it
Okay.
is the yield that you are expecting to make for holding that commodity despite its funding costs.
Do you like silver here?
Actually, I like silver, but not today. Not for the time being, but I like silver starting from March, April, I should say.
Okay.
Starting from then, I think that uh, this situation will reverse where the convenience yield of silver is going to fall below the convenience of gold. And it will be the time when the dollar index will start to fall.
Okay.
And
All right. So, what do you have price levels in silver that you'd be interested in buying? You had it in the euro.
uh,
It's under 22.
I expect the silver to go as low as 19
Okay.
level, and
That'd
it will
shake
be
all
a
the bulls out. Yeah.
yeah, it will be a very, very good opportunity to go long on the silver until 27.
Oh,
And
so you could marry it then. How about gold?
gold is the same story, but I think
Not as
that is still not as yeah, not as
silver will outperform vis-a-vis the gold silver ratio.
certainly. And I
Okay.
think we should see gold inching higher as high as maybe 200 until $2,300 or something, or maybe
Okay.
$2,400 in between, somewhere in between that range.
Great interview, Okan.
Thank
Interruptions
you.
and all. And I know I interrupt plenty. You are really insightful guy. And I don't see one like bar chart on an, or candlestick chart and how you come to these conclusions. And I learn from you new things every time you come here. So I want to thank you for your contributions to F.A.C.E over, we've been talking a few years now, for
Yeah.
your giving spirit of coming in and making very good calls and showing, a lot of fundamental reasoning behind them. So, do you want people to follow you, or you're just doing this because you like doing it, coming here to talk to me?
People can always follow me and they can always ask me questions, send me DMs, their direct
Okay,
messages, or even they can send me messages over the Twitter. I will be very happy to answer their questions, and I'm very delighted to be your host, and I appreciate that. Thank you very much, Dale.
all right. So I'm going to type Okan's X handle here for you guys to really have a great source of people. This guy looks under the surface and uses a lot of rate work and um, intermarket relationship work. Much respect from me, Okan, and I hope 2024 is your best year ever.
Thank you, Dale. The same for you.
And I'll get in touch with you, and we'll talk again in the spring.
Sure, certainly.
All right, and
Thank you.
thanks for telling us what it's like to have boots on the ground in a country with having a 3-year currency crisis.
Yeah,
Pretty interesting, and I hope things improve for your people.
it should improve in the next 2 3 years. Not soon, but we should expect it in 2 3 years on.
Okay. Why don't we wrap it with this? Also, I remember last year you didn't think the market stocks were going to do much till year end. Well, they did plenty. Your view on stocks for 2024?
I think it's going to be a year when we will see a lot of consolidation and repositioning in the funds, and and uh, and this will keep the maybe maybe because there is this recession going on in not in US but in
Europe.
Europe. I think it will put some pressure on the stocks in general, not only in US but elsewhere in the world. but then we should see a lot of strength coming starting from end of 2024. But this year it will be the time for consolidation, and then from 2024 until maybe 8 years from then, we will see a lot of strength in the stocks.
We'll have 8 good years after 1 year of digesting gains. Wow, that's a
Sure,
okay. That's a very
yeah,
bullish,
because
optimistic.
inflation is high. Inflation is
Okay,
high, Dale.
so
Yeah,
we have good times until inflation turns into deflation, and you don't see that happening for 8 years.
because the world population is increasing by 80 million people every year. So
Okay,
it's difficult to keep the inflation tame.
okay. Okan Abar, my trading warrior brother. Follow him at Okan Abar. Have a great weekend, and thanks again, Okan. I'll be in touch with you.
Sure.
And everyone else, hope you have a great weekend. Recharge your batteries. You really bookmarked the week for us here, Okan. Very, very nice interview. So everyone, have a great weekend. Remember, don't just count your pips, count your blessings. We do our best to edify traders every day, and hope we accomplish that this week and gave you guys an edge. So see everyone Monday. Adios. Thanks
See you
again,
then.
buddy.